So in the final portion, we're going to switch gears a little bit. We're going to talk about how technological advancements are radically changing how we invest. So peer-to-peer lending, robo-advisors, algorithmic strategies, a lot of disruption going on. So please welcome our next panel. All right, great. So we have Catherine Wines, the co-founder of WorldRemit, and Jeroen Broekema, managing director of funding Circle. And so because this is a little bit of a different gear, and we're straying away from the world of pure ETFs a little bit, and in the spirit of fintech, just to help the audience get acquainted, I was hoping each of you could give me your elevator pitch of what your company does. And keep in mind, it is an elevator pitch, so the door is going to open quickly, so you don't have too much time. But Catherine.
Okay. WorldRemit is what we call an online money transfer business. What we try is to make it easier for people to send money back home. So we have a very niche market which targets, migrants who are working in developed country to send money back home to emerging economies. So we started back in 2010, and it was very much to disrupt an industry which had been very traditional, brick and mortar, where you had to go to a shop to send money, a bit like the travel agency years ago, where you wanted to buy a ticket, you would go to a shop. So it's online. We send from about 50 countries to about 150 destinations. And last year we got about £61 million of revenues and growing.
So what we do at Funding Circle is bring two groups together. So on the one hand, it's small business looking for a loan. And on the other hand, it's investors investing in that loan. And on that investor side, it's very, very diverse. So it's people like you and me investing €100 onwards to institutional players doing hundreds of millions, billions. So bringing those together, organizing everything for that trade between those, and not doing that with a balance sheet, clearly. So we're just matching those two.
So I think what's interesting about both of these companies is you're coming in and trying to sort of disrupt some of the incumbents. Catherine, I know sort of on the bigger incumbent side, you have, for example, PayPal bought Zoom. So it's clear that this world isn't just startups anymore. So how to differentiate yourself? How are you different than those existing businesses?
Yeah. Well, to be frank, for the moment, the key people we are disrupting is companies like Western Union and MoneyGram, which have a larger part of the market and have been traditional, because of that monopoly they had not really moved on to look at a new technology, although they are changing now. I think, yes, there are new players coming in the market, like PayPal, who has bought Zoom. But as I said, they are sometimes, looking at slightly different segment of the market. This market is very specific and still quite fairly high entry, barrier to entry because of the regulations, because of the stickiness. Customers don't change their financial services that quickly, so there's still a fairly high level of stickiness in our business. Although we've been here 8 years, only 5 to 10% of the market is online. There's still 90% of remittances are sent offline, i.e. going to a shop.
And I feel like that's 5 to 10%. I mean, that's still very low. What is it, like, where do you see that growth in a year, 2 years? How long is it going to get
I think
that number
it's scaling up, very quickly. And, we forecast that, and the World Bank as well will look at remittance world, is looking that, probably by 3 or 4 years' time, it'll be probably up to 60%. I think it's something which, takes a while to be adopted, but once it's adopted, and it's scaling up. And also, I think it's the fact that people use smartphone these days. They want to do everything on their smartphone. So when you start, thinking that you can also send your money on your smartphone, you don't need to go anywhere, then I think that's where the change of in terms of attitude to going online rather than the traditional offline.
So we're going from challenging this very niche space of Western Union brick and mortar to your own to banks. I mean, small business lending is a very difficult endeavor. I mean, what gives you confidence that you'll be successful in disrupting the space?
I mean, I think there's a couple of things there. First of all, this has always been the space of banks. And clearly that wasn't a fast process for customers, for small business customers. It was very, and still is in most cases, a very lengthy process. It takes a lot of time for customers. It's often partly online, partly not online. You have to hand in a lot of documents. You don't have your direct contact, or you have to go to actually a bank branch to do that. So it is, for us, has been always such a pleasure to work for borrowers that are so happy that finally they can do it online quickly, to have that one person to talk with, and then know we can get that loan or we can't, and move on with their business. And just that already is a massive change to the market. And then on top, we're way more using technology, way more than any bank, I think, as well as customers are just very, very happy. And that makes a big difference. And as I said earlier, I mean, we're not a balance sheet lender, and that's a structural difference to what banks do, because we're matching money with people that need the money. So. And
I think I would reiterate the word convenience, because that applies to us as well. It's the convenience. People, we have busy life, everything has got to be done fast. People want things that are convenient, not to have to wait. They want it now, it's instant. So, and I think that Funding Circle has got the same kind of advantage over the banks, is this convenience.
And also, I mean, apart from the story I just said, what I like to tell, but also just the facts. So for example, in the UK, we're doing more lending to small business, because we're only focused on small business, than the top 20 banks combined. So whereas here in the Netherlands, we're still getting into that position, but we've also showed already in our core market that we can do it. So apart from all the USPs we think we have, we've also showed that we can.
Sure,
and done billions.
Right, yeah. But in the same light, though, you have these incumbents who already have a captive audience. So what's stopping them from making an acquisition, or internally just building the same capabilities that both your firms already have?
I mean, I think ultimately banks are of course in a great position to have money, to have customers, but first and foremost, we have to focus on that product. So the only thing we do is small business lending. So that makes a huge difference. Then obviously it's the use of tech and data. We're so far advanced now. We've been operating for 8 years, so we really know this business from the inside out. We really, really understand every bit of it. So that makes a big difference. And then the balance sheet thing, which is a structural thing you're not going to change, or you should start an off-balance sheet lender. That's the only option.
Yeah, from my point of view, the incumbents are very slow to move. They are a very large organization, and to try to move to kind of a digital world is very difficult, because they have legacy system, and that applies to the banks as well. Trying to change from, we started 8 years ago with a blank page, and we built a system, and we're developing it all the time using technology as we go along. And I think that's the main challenge of the larger kind of organization, is the fact they have, banks had a challenge with GDPR because of those legacy systems. We don't, because we can, we've got new systems and we develop them all the time. So that's, for us, is one of the key kind of problem for those organizations.
And both of you, I mean, very niche organizations, very niche goals. Is that the way you stay, or do you want to be acquired, or are we going to broker a merger between both your firms and make it more of a one-stop shop? I mean, what does the ultimate goal for your firm look like, Jeroen?
I mean, for us, it's a very simple answer. We really want to stay focused and be really focused on delivering this quality product on both sides. So again, on the borrower side, a really simple experience, and on the investor side, stable returns. And that's what we want to keep focusing on. And by doing that, it's actually a massive, massive market. It's often underestimated, but alone in the Netherlands, it's billions, right? So, and the Netherlands is, obviously not the biggest country in the world. So we're also operating in the US, in the UK, and Germany, and it's just 4 countries, and we can already do billions. So, we always have this long-term vision that we will probably be doing 100 billion at some point, and that's only, I don't know the exact number, but that's only a very, very small part of the total lending to small business in the world. So yes, it's a niche product, you could say, but at the other end, you could say it's actually a massive market we're in.
Yeah, same applies to the remittance market. You know, the World Bank estimates there's about $600 billion being sent every year as remittances, and actually these are what we call the formal remittances. There's probably as much as that, if not twice as much of money sent, you know, informally, i.e. people carrying the money with them when they go home. So I think this is, you know, a very big market. I think for us also, it's not that we need to keep focus is developing the product, adding to kind of, you know, to help our customer base to have more choice and maybe extend the product range. But, you know, don't forget, we work actually with a lot of companies. It's about partnership because we can both on the send and receive. It's about working with other business and being as partners. So, you know, in that way, we stay focused but work with different organizations as well.
And one thing that you also both mentioned was use of technology and data. And I feel like we're at this really interesting point where the things you can do with that are very impressive, but at the same time, there's more concern from the user standpoint about how that data is being used. What has that conversation looked like internally at your companies about finding the line between innovation and also protecting privacy of clients?
I think ultimately, in our business model, as I said, these two players we're serving, they both benefit us from really understanding the credit risk the investors are taking. So obviously, if we do the credit risk right, then it's a win for everyone. It's a win on the borrower side because they will get lower interest rates, or at least interest rates that fit exactly what it is. And on the investor side, it's the most realistic thing you can get. So yes, we're always extremely careful with the data we have, but we always know that it's the benefit for both players if we get the credit risk right. And for getting that right, the more data you have, and the better, you know, the best ways to use that data will lead to that outcome. So you know, very careful with that data, but yeah, at the same time, using it to the fullest extent possible. Anything that would sort of surprise anyone to hear really innovative, interesting that you've done with that data? I mean, I think we use the data of our customers. We've now done around 50,000 loans globally, and we really use the data from the beginning where we do marketing, how we attract customers. So, for example, kind of past way of thinking about it is you just go out with marketing and find people, hopefully find people that need a loan, borrower on this case, borrower side. But we try to go out and use that data to actually, you know, find the people we already kind of know that they're in a position they probably need a loan. And then we use it all the way down to, you know, the underwriting we do, as well as how we process it, all the way down to collections, where we're actually really good because ultimately there's always a couple of loans that won't make it. How we do collect the money back. We use it there a lot as well. So. And Catherine, very different audience, very different users.
Yeah, you know, Sam, you know, we don't share the data. We product very, you know, obviously in a regulated business, you've got to be very careful about the data. But what it helps is to develop your business. So, for example, at the beginning, we realized that people would prefer to send smaller sum to more people rather than maybe a large sum every month to a lot. So, we reduced the fees. So that's, you know, that was the data providers that. But, you know, now, you know, we also be able, with the amount of data we've got, to kind of use machine learning to help us to reduce the level of fraud and to be more, you know, smarter in terms of identifying fraud. So that's, you know, a very important part as well.
So obviously fintech, just from the investment point of view, is a very hot area right now. What makes sense for that structure, Jeroen? Does it make sense to IPO? Or maybe the question is, when is Funding Circle going to IPO?
Well, we don't comment on that one, but we're a private company, and I think you know, the kind of businesses we have are extremely interesting because they are, you know, we are able to potentially, as I said earlier, to scale to an extreme extent, specifically because we can automate big parts of it, and still at the same time, by the way, we still use also people. We can't do it only with tech, so it really is a fintech business. It's on both sides. But yeah, I mean, that's not answering your question, but yeah.
I guess, we're probably both in the same situation, especially we've got the same investors as well. Ultimately, you have to kind of get a return for your investors. So, it's either some kind of trade sale or IPO. As a business, I think we would prefer to stay independent, and therefore IPO would probably be, the kind of potential exit. But that's, the world kind of moves very fast and things happen. But certainly, I would see IPO probably as the best solution. Mm-hmm.
So obviously your businesses are different, but it's interesting you share the same investors. What does that do to the FinTech community as a whole when you have this piece that connects all of you?
I mean, what's interesting about our shareholder base is really it's the venture capital players that are in there. There is financial backers, so we really, even on that level, we're having fin and tech in there. And then there's the employees also partly owning the company. So that's a great mix. And I think that the great thing about the VCs, which are the ones we're probably sharing, are the fact that these people see so many businesses, and there's so many things you can apply to this business and to another business. And that, of course, has a lot to do with on the tech side. I mean, the financial part is not, the VCs are also in, let's say, in Facebook, or, I mean, it's a tech part that we share more than the financial part.
Yeah, I think the VC and obviously the quality of some of the VCs that obviously we got on board do help. Just by networking, by bringing the expertise and kind of experts to work or introducing you to a lot. I have to say, as an online money transfer business, trust is so important, and we found that when we got our first Series A with Axel. It made a big difference to us because it put us on the map. It kind of gave us a status which we needed to enhance, to kind of, to help people, trust us. So that was very important as well. Mm-hmm.
I'm hearing a lot of good things about working with VCs. Give me some of the downsides.
To be honest, I mean, I haven't seen any so far, and I'm really echoing what you said. It's really. There's some of these people are incredibly knowledgeable on this business, and the great thing, I mean, how many of us has seen so many businesses, right? How many can really look into the details of all these businesses that have, and they've also seen a lot of failures, obviously, right? So they're not, we only hear the success stories of where VCs are in, but they're obviously also in stories where it doesn't become that really big company. So that's where we learn a lot from. I haven't seen much downsides right now. So,
Catherine, I don't think it's downsides such. It's a question of managing the situation. Especially if you get quite a lot of investors. Obviously sometimes they might not always be aligned, and that can be a challenge. And therefore you've got to manage that. And at the end of the day, if you give them surprises, high negative surprises, then they're not going to like it. But that's normal. So it's to have that dialogue, that continual dialogue, to say what's happening and explain if things are not happening exactly as you were, kind of thinking. So it's no surprises. I always kind of, when I kind of talk network with other people, don't give them any surprises because they won't like it.
Right. So we only have a few minutes left, and I think one interesting thing to end it on might be sort of to zoom out in FinTech and ask where the next area of growth is. And to do that, I'm curious if you were to start fresh, start your own FinTech company, what would it be? Would it be ETFs and robo-advice? Would it be your own? Would it be Catherine's business? Where, Catherine, vice versa? I mean, where do you see the next area of growth in here?
Well, that's a very interesting question. If I would start over, I mean, what you guys are doing is great. Obviously, but you're there already. So, what I find very interesting, taking our model to a lot of other parts of the business. So, for example, there is in the Netherlands, the market I know best. There is already a big market for matching investors with, for example, mortgages. It's one of the largest percentage-wise in the world, and I think that business model where you take out the balance sheet and directly move money, for example, from pension funds or insurance directly into the economy is a great model. And I could see, different versions of that in where you do lending. I see options where you can actually apply that model. So I would probably, to answer your question, if I would start another business, I would really take that model to other parts, and you can, obviously, all financials here, so you can find all kinds of ideas of where you could apply that. Probably go into that.
Well, I think there's a lot of areas. I say one kind of more personal because I'm helping a small company who's using crowdfunding to help people back into work. So there's so much can be done to solve problems much better actually than government and kind of charities sometimes. So I think that's an area. But also blockchain. I'm particularly interested in blockchain technology, not crypto, blockchain technology itself, because I think it can also help, especially in our sector, could help us to move funds more quickly. So I think and ID verification and so on. So there's a lot of things in blockchain as well.
Great. Well, we'll keep an eye out on those companies from you all and your current companies. Thank you so much. I really appreciate it.
Thank you.